Hello and welcome to episode 8 of the Craving Crypto podcast. And today we're going to be talking about whether stock trading is worth your time as a diversification from crypto, and going over electricity and mining costs, and that's a crypto flaw debunked, and of course, as always, the market review. So let's get right into this. Okay, so is trading stocks worth it? So hit that like and hit that subscribe button and we'll get right into the market overview. Total market capitalization is at $269,810,000,000. 24-hour volume is at $13 billion. Bitcoin is at 114 billion in market cap. Current price is at 6,668. And the 24-hour change is up 0.52%. Ethereum's at 47 billion in market cap, price is $474. 24-hour volume is 1.6 billion and the price is up 0.2%. XRP at 18 billion, price is at 47 cents. 24-hour volume is 245 million and the price change is down 0.21%. Bitcoin Cash is at 12,687,000,000 in market cap. Price is $736 and the price 24-hour change is down 0.57%. EOS is at 7 billion in market cap and the price is at $8.67. 24-hour volume is above XRP at 600 million. Yeah, 600 million in 24-hour. And then the 24-hour change is down 2.32%. All right, so as far as the direction of the market currently, we are still above this low in the total market cap. So let's click on this chart, pull it up. We haven't started to trend downwards as of yet. So we're just going to go into the 7-day here. As you can see, we've had a 7-day overall upward trend, making higher highs and higher lows. Total peak of the market cap in the last week was 276 billion. We've started to sell off a little bit from that point, so we'll see if we go in for a deeper sell-off on the short term. As far as the 1 month goes, we have found the lowest point in the market cap on the month being 237 billion. We've started this minor uptrend here, so again, we're just seeing if we can hold these lows at 233 and then at 237 in market capitalization. Over on the 3-month chart, it looks like we've been in a pretty big overall downtrend since May 5th. And that was really because we made this resistance point previously at 457 billion. We went right up to that same point and then rejected. So the market movement is pretty normal. We're watching for a reversal here. I wouldn't expect a ton of pumping as of yet unless we can get above these resistance levels at 259 billion and then this resistance level at 270 billion. If we can get over those levels, then yeah, we'll see quite a bit of momentum come back on the upside. And as far as big picture goes, I'm still expecting a reversal at some point. This trend has sold off very violently and it needs to see some more upward action soon. So now let's talk about, is stock trading worth it versus Bitcoin or cryptocurrency trading, and should you be doing this? Because I want to bring this up. I know a lot of people trade crypto and stocks. A lot of my people in the VIP mentioned that they've traded stocks before, and when I do little meetups and stuff like that, when I'd actually meet people in my Discord and stuff in person, they would tell me that they were a little bit diversified into stocks. So I think it's something that people are thinking about and wondering if they should be doing. And, so I want to talk about a few different strategies you can do and deciding whether it's something you want to do for yourself as well. Because investing, I think, is an important aspect of everybody's lives. I think it's good to invest in some commodities, good to invest in some stocks, potentially some land, and investing in cryptocurrencies is also pretty awesome too, especially if you understand how to trade these cycles. So the difference is that cryptocurrency is way faster of a market. So if we look at what's happened since 2015 in the cryptocurrency market, specifically Bitcoin, we can take a price tool and we can see that Bitcoin went up 8,000% since, mid 2015. which is pretty amazing, right? But that is only if we take our date and range tool, or let's just see date tool, and we go over, we can see that it did that in 851 days. So that's really, really fast movement. You know, you have an 8,000% move in 800 days. You're getting some really, really quick, you know, projections and bull runs on the upside, where if we go into the stock market and start to look at some big stocks such as Apple, and we see what they do in the period of similar time frames, you'll just see virtually no comparison, you know. So let's take what Apple did in the same period of time since 2015 into today. So in a similar time frame, Apple did about 95% on the upside, right? In the same amount of time that Bitcoin did 6,000%, 8,000% gains. So that's something to be aware of when you're trading stocks, especially if you trade large cap, so large capitalization stocks, they're going to be moving a lot slower than Bitcoin and the crypto space does. So for me personally, I allocate more to crypto trading, but I also understand the volatility pretty well, and so I can manage that. Whereas if you don't understand volatility well and you're newer to cryptocurrency, then you might want to allocate more into the stock market if you know how to average into a good long position and ride a big bull trend. So if you are trading the stock market and investing in the stock market, then you're probably used to these slower cycles and aware of them. Now, if you aren't into the stock world and you want to get in it, it's not that hard to go set up a brokerage account. Just Google, you know, get yourself a stockbroker and allow yourself to deposit some funds into the account and buy some stocks. I recommend doing small amounts at the start, especially if you're new to this. But you know, I've got some money in stocks, like specifically some cannabis stocks here in the US that are open for public trading, because that allows me to get some quicker gains, such as crypto, because those ones move a little bit faster and they have pretty parabolic movement similar to crypto. So I do some of that. And then also, if you look at the S&P 500, you can see that it's been on a pretty big bull run. There was some obviously deep corrections in the past, you know, but that was because this was a highly volatile market down here. It was also, you know, the US stock market, the way that things are going right now, it's just a fractal. It grows and grows and grows, and it might have a little bit of a correction right here, but this is a growth fractal. This is an upward trend curve, and it's not just gonna, like, you know, dump all the way back down to $487 or anything like that. That's not how these markets work. They go up and they do price discovery, meaning that they have corrections on a bull trend. They go up and then they bounce and they make all this price discovery. And predicting all of this short-term movement is kind of hard to do. It's not really good. You want to just average over a long period of time and ride these big bullish trends, especially in the stock market. And, you know, you let it grow and grow and grow. And when it grows even bigger, and this is just the way that they work, it makes the last market cycle look small. It makes the last correction look small. So let's just go into the 3-month here. And I'm not saying it's going to look exactly like this, but I'm just explaining the way that markets grow and expand. It might do something similar to this. And I do think that it could have a little correction here just because it's been on a nice bull run. So it might go back down to 2000 or something like that. But I'm not predicting that until I see some serious reversal in the S&P 500. But this is just an example of the way that markets grow. And then it makes this little correction that happened in the past, the 2008 thing, look small. And then, yeah, it can do a correction, right? And then it can do some selling off. But it's not like it ever goes back down to these levels. It's not like you have a crash that just goes below a certain point. The way that these things expand is fractal in nature. It makes a new market cycle and makes the old one look small. So that's kind of my thoughts on understanding stock trends, and so you don't get so stuck up in short-term movement. You know, there could be a dip, a little one, because we have had a lot of buying right here and a lot of people are bullish on the stock market. So it wouldn't surprise me if there was just like a little correction right here, but I am bullish big picture on the S&P 500 and the stock market. I don't expect it just crash to nothing or go, you know, back down to 630 or 90 on the S&P 500. That's not the way that markets really move. They grow and expand in a different fashion. So, and so Bitcoin is definitely faster. Altcoins are even more impulsive than Bitcoin in nature, and it's good to be in a little bit of everything. If you want some stability, get into the stock market. If you want a little bit more stability, get some silver. And then if you want a little bit of risk but high reward, get into cryptocurrency. And I honestly think that holding like Bitcoin is like, in my opinion, I believe that Bitcoin is digital gold. I think that's a great description for what Bitcoin does for us as a storage of value. And so I think that it's a really solid investment as well. It's just that some of these altcoins you do have to watch out for, just because you don't know if they're just going to be some terrible little ICO project or something that you don't want to be holding for a long-term investment, and you just maybe want to do for a little bit of trading if you're into that aspect of all of this. So that's kind of my thoughts on, is trading stocks worth it? Yes, it's super slow though. If you're trading swings and stuff like that, it's going to be a lot slower. Now, penny stocks are kind of more like cryptocurrency. They're a lot more volatile and they're fast movers. So maybe if you're into that, you might be making quicker percentages and gains in the stock market. But the main ones like Apple and the S&P 500 and the bigger, larger cap stocks, you just want to accumulate for long term because they have really nice uptrends. So you just play the trend and expect it to continue, even if it has a little dip before it goes higher again. So let's talk about mining energy consumption, because the thing with miner energy is there is quite a bit of miner energy intake, and depending on where you are, depends on where that electricity is generated from. Because I know, like back in Utah, there was actually quite a few coal mines, and that's how they were generating electricity. So you've got a lot of different aspects to kind of the argument of the mining and the energy consumption. And I personally think that one of the best arguments for this is if you just step back and think about how many servers banks are running and how many servers Visa network runs and how many servers that all of these large corporations and companies and Visa, MasterCard, all of these companies have to process your transaction. So they're using electricity already. And yes, at the current point in Bitcoin and cryptocurrency, it isn't the most absolute efficient as far as energy consumption goes by any means. But this technology is also very young and very underdeveloped. There's going to be huge developments in this space, and there's constantly development in this space. It doesn't happen overnight. So as the energy consumption gets reduced, it'll just be more and more efficient overall. And I do expect that to continue to happen. And what's interesting about this is as we generate more ASICs, we get to a point where we can mine cryptocurrency faster and faster. So there's a growth curve for the way that ASICs are produced and how quick they can mine at what energy it takes them to mine. So as long as we can get a consistent growth curve for that to continue, the price of mining is going to go down, and the ability to process a large amount of transactions quickly will go down as well. And since there's demand for Bitcoin and for cryptocurrencies, it's not like the miners are going to go away. It's not like people are going to stop developing these things. So yeah, miner energy consumption does have some short-term issues now, and I do want to bring up the fact that, hey, look at the Visa network, look at even just like an example of a centralized server would be Facebook. They have servers everywhere, and they're just huge computers with tons of electrical power that they take to run daily, and it's not cheap for them either. So all systems take energy to run them, and there is a small inefficiency aspect to crypto, but there are some coins which are figuring out how to get past that, and there's development happening to get over that. So Laka Flocka said, awesome video like always, and thanks for the background info to this strange event in the crypto world. Since then, CIS came on the table for me. I was watching their chart CIS-USD and CIS-BTC on TradingView and wonder, how do you do TA on a coin like CIS coin after such an event? Just pretend it didn't happen? Would love to hear your opinion on that. Keep up the good work and keep going on going, Dallin. All right, hey, thank you. I appreciate the comment, and I think that's a great comment, so I'm gonna like that. CIS coin is something that you just want to ignore completely. It was a manipulated move in the market, and everybody's aware of that. The information is out too, so you can prove that. And if you just go look, it was just a huge pump. So there's no reason to consider that in your TA at all. You basically want to remove it and completely ignore that it ever happened. One way to do this is to only look at the price on another exchange, such as Poloniex, because it's going to look a lot less manipulated. So if we just go over to CIS and then Poloniex Bitcoin chart, you'll see that this doesn't look quite as crazy. It was just a huge flash pump on here. So what I would do is go into the bigger time frame, and I would definitely chart this on the dollar, because then you're going to get a lot less noise. CIS dollar Poloniex, here we go. And then let me just remove all these drawing tools. And then you just pretend that the wick isn't there at all. And you just take your Fibonacci tool. You're going to go from the low to the high, which will determine some points that it could bounce. And then you're going to draw the falling wedge pattern, because there's actually a pretty big wedge happening here. And then you can count the waves on the way down. So we are expecting CIS coin to make somewhat of a move out of this, but you just need to completely ignore this wick and pretend it didn't happen and wait for the actual reversal in this bigger falling wedge to happen. So I hope that answers your question, Laka Flocka. And another question was, at high altitude investing, do you still think BTC could be headed towards 7,260 in the short term? So this is something I was talking about on my live stream, that I think Bitcoin can be bullish up to the $7,000 levels. And then I wasn't giving the exact predictions because that was for the VIP members. But if you go over to the Bitcoin dollar chart and then you just remove this, you can see that it's likely we could have some upward momentum to these resistance levels that we previously have made. That these used to be support right here at 7 and 7.2. This whole zone is an area that we could expect Bitcoin to move to. So that's still in my predictions, still holding true to that from the live stream. So thanks for that question. Yeah, so that's everything I wanted to go over today. My Coinigy sign up is right here. BIMX sign up is right here. Again, leverage trading is not recommended for beginners. And then my BTC address is right here. If you like what I'm doing, you can donate. And finally, my website is right here. Thank you so much for tuning in today's video. I hope that you learned something. Go ahead and hit that like button, hit that subscribe button, and go to the comments below if you have any questions. I will see you in the next episode. As always, stay profitable out there.